I think it has been one of the biggest driving factors, but all the investor polls as of lately have said that it's now more about rates and it's more about the Fed by about a 2-to-1 concern ratio. So China taking a step back, Fed taking a step up, but I still think that both of them are vying for a lot of the attention of the marketplace, at least on a day like today.
We've also seen a big sell-off in Asia. We saw a slide today in some European stocks. Rich, when you're watching what's happening overseas, how much are you factoring that into your own investment strategy?
Oh, that's a large part of it. You know, this bull market and this economic recovery has been very narrowly perched here in the U.S. and within the corporate sector, and within that, the tech sector for the most part. Overseas, they're still in a slowdown. Their equity markets are all in the red. So I think once you look outside the U.S. tech sector, it's really a bloodbath out there. And that has a dramatic effect on our economy. There's going to be no fuel for our recovery or corporate earnings coming from the international arena. We're solely dependent here on what's going on in the U.S. And unless the administration has another rabbit to pull out of the hat in terms of more tax cuts, we have rising rates. You know, the outlook is not as rosy as it was a few years ago.
So is this, when you say bloodbath, I have to ask, is the bull market dying or just stumbling? And how would you ever know except in retrospect? Stuart?
You know, it's been 9-10 years since we've seen it, so it's hard to recognize. But, you know, the economic cycle is coming back. And so, yeah, this could very well be the canary in the coal mine. It could be the end of this recovery right here. You have all the classic signs. Corporate earnings decelerating. They're not negative, but decelerating. Economic growth decelerating. Rising rates at the short and long end of the curve. And again, a painfully narrowly focused bull market in certain sectors and primarily certain stocks. So cash is still in the running to be king, if not this year, certainly next.
Steve, how are you feeling? How are you feeling about the markets at this point, Steve? Because, you know, as Richard had alluded to, tech is really having a hard day today. It's been having a hard year, for that matter. And then you take a look at today's action. Industrials are feeling a lot of pain today. And so we're seeing some of these, not just the growth sectors, but also the value sectors really having difficulty.
Right, and value cannot lift this market. But I said the other night on Fast Money that Netflix was the most important earnings of the cycle. I still believe that. If you look at a chart of Netflix over the S&P, it's undeniable the correlation that we've seen. Growth stocks have been leading the market. They're fading now. That's the end of the bull market right there if growth stocks continue to fade the way they have been fading recently.